My first guest says that there will be a lower rate environment and that will actually trigger economic thrusters. So let's bring in now Blanke, Schein, Wealth Management CIO, Robert Schein. All right, Robert, walk us through first of all, let's talk about the number of cuts that you anticipate and what's the thruster. When I saw that word, I got pretty excited.
Well, thanks, Charles. For next year, we're going to see the rate environment continue in terms of lower. We're going to see a Federal Reserve that's going to be more Trump-esque, if you will. Mm-hmm. And even in December, when we just saw the rate environment 2 weeks before the cut actually happened, it was a 17% chance I was going to cut. So no one really knows. Market Fed funds futures are not pricing too many rate cuts in the future. But next year, we see at least two coming our way.
At least two. Okay. So let's talk about one thing that stood out in your note. And people have been talking about money on the sidelines or fresh powder and all this for a while. You're urging investors to get out of cash. Now, we're looking at money markets. The most intriguing thing right now is there's not a big stampede out of them, right? We're still total. This is from ICI, 7.7 trillion. And that number is still elevated, but you think it's a mistake at this point?
8 trillion in money markets right now. There's over $1 trillion more than it was last year this time. Everyone's holding on to that 4% handle. You just saw the stubbornness of the 10-year Treasury. We believe that's on its downward trajectory. So institutions are going to catch up. Retail's going to catch up. That money's going to find its way into assets that are going to stay ahead of inflation.
All right, let's talk about one of them, the S&P 500. You've got a target next year of 8,000.
Yeah. 8,000, we can see that. I think when we see estimates, you just showed earnings estimates across the street, consensus is. The last 2 years, they have been wrong to the downside in terms of not bullish enough.
Right.
We have one big, beautiful bill. You have 8 trillion on the money markets that has to go somewhere. And corporate America, with the AI boost, is actually getting more efficient. So we see a lot of good positivity moving forward.
I saw in your note, you're not anti-AI. Right. But you think people need to start to move money around here a little bit, right? To broaden it out. I mean, that's been one of the themes, particularly in the last month or so. As AI has stalled, other areas are doing well. Let's just talk about some of these areas because Lulu, the stock was the number one percentage gainer on Friday, but I think it's because they're getting rid of the CEO.
CEO change. Right. Yeah. So we're seeing with Lululemon, you're seeing last year, it's down 40%. So when a company recognizes that they have to do something and change directions, absolutely. So you got a great value here. Plus, I got 3 daughters, and top their list right now is Lululemon.
Really?
It was something different last year, and they said the number one reason why is quality because of Lululemon clothing.
Disney has been on everyone's list. It's going to come back any day now, any day now. I think a lot of folks are disappointed post-COVID because it was poised, right? It was going to be a domestic economy, staycations, parks. It still hasn't made that move, and we've seen a lot of false starts. Why this time?
Well, you saw Bob Iger jumping into the AI, trend, if you will, last week with a $1 billion investment. But that's going to take time to play out, right? It's protecting their sort of 200 characters, and we'll see where that goes. In the short term for next year, why we like Disney is because the cruise lines, there's online big cruises that are coming on in terms of big ships that they're putting in the water for next year. That's about $500 million of operating income that could hit Disney's bottom line.
Let's just hope they did better than they did with that Star Wars cruise ship. Yeah. That was crazy. Hey, I got a couple other things, but I can't let you go without Blackstone because we've been talking about private credit, private equity, being a little worrisome here. You think use this as an opportunity to buy?
Right now, number one, if you look at the open aspect to the 401ks, right? Blackstone is the one that could get us into that market, if you will, with the Trump administration and the 401ks and 403bs, and they're the private market leader. So the stock hasn't done anything this year, so we can see that move.
Eli Lilly, it was a juggernaut. It pulled back a little bit. Sometimes these stocks live and die on the latest update on the GLP-1s, but it feels like they're the winner. Like they beat Novo, they're the winner. You say use this dip as
well. Back in August, they had tremendous 6 insider buyings. Okay, so follow the money, Charles, on that. Number one. Number two, their pipeline is robust. So it's not only GLP-1s, it's diabetes, Alzheimer's. They're going to be winning for quite some time. Plus the broadening out of market into healthcare. We're going to see that.
All right, before I let you go, I want to talk to you about small caps because that's the theme. It's been working. But the problem is a lot of them don't make money. It's hard to find the exact winners. But you've got a couple of names you like here. The metals company is one of them.
The metals company is drilling in and offshore. Think the Pacific. Again, in April, President Trump signed an executive order to allow for that for the precious metals. It's an arms race right now around the globe, if you will, for metals. And they're a company that could be on the forefront.
AEHR. Test systems.
They are basically a secondary play on AI, but they test all the chips to make sure that they're more efficient, and they're basically the big hyperscalers can start scaling, and they just got some big contracts.
Great stuff, Robert. Appreciate you, man.
Thank you.
See you soon.
Blanke Schein Wealth Management is a group of investment professionals registered with HighTower Services, LLC, member FINRA and SIPC, and with HighTower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through HighTower Securities, LLC. Advisory services are offered through HighTower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analysis, prices, or other information contained in this research is provided as general market commentary. It does not constitute investment advice. Blanke Schein Wealth Management and HighTower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This document was created for informational purposes only. The opinions expressed are solely those of Blanke Schein Wealth Management and do not represent those of HighTower Advisors, LLC, or any of its affiliates.